A very good morning, everyone. Welcome here to our weekly live room at binary.com, starting at 7 a.m. UK time, not 6 a.m. This is a new time. From now on, we'll be here every Monday at 7 a.m. So, looking forward to that. And what is here? Well, we're going to take a look at the charts, the technical analysis side of the currency market and gold, hosted once again by binary.com. And my name is Chris. Before we do that, we're going to take a look at this risk disclaimer explaining that trading global financial markets is considered high risk and may not be may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is just for educational purposes only. Thank you so much for your attention on that. And what this is well, we're having a live market commentary for free. It's going to be quick and precise. And we'll have it weekly live, but it will be recorded too. So make sure to take a look at this link, blog.binary.com/weekly trading room. And if you just punch in your email address and name, you'll get a heads up when this video recording is ready, and you can watch anytime at your own leisure, whenever it suits you. So make sure to do that. We're going to take a look at these currencies today. For example, the euro dollar. Right now. But before we do that, in fact, we're going to take a look at this economic calendar quickly. Today we only have the CAD building permits. Last week, of course, we had the NFP. That always is a major event, just like the interest rates on many currencies like the euro, pound, CAD, and Aussie. So that was a very busy week, a very busy economic week with a lot of news scheduled. This week seems to be a lot quieter if you look at the current schedule. We have only the New Zealand cash rate or interest rate plus statement, and otherwise really just a normal week, nothing major going on. Let's move over to the dollar yen, and I'm looking at this from a 1 hour perspective here, and I was looking in fact what the likelihood is of more upside. Now we've made a 5-wave move up here, and it seems that this could be a wave A, wave B, for one more wave C, maybe for example back to the 50 fib, to the 618, or even the 786. All those three spots are support levels, and we could see a bounce and continuation on this dollar yen for more upside. All right. Now, if that were not to happen and we do move immediately to the upside, then we will break above these tops, and there should be space to go to the upside here, maybe up to 101, 101.10. All right. So we will know if we continue, if we break these tops, then we have upside potential. If we correct, if the dollar yen were to correct more, then we will stay below that level and probably bounce off either the 98.50, the 98.10 level, or the 97.50 for that upside. All right. So any move down is, in my opinion, still a retrace from our upside, and if we move up, then a signal, a confirmation signal of more upside to come. All right. So that's the dollar yen. This is the 1 hour chart. Let me go to the daily chart, and you can see that we're breaking this triangle here, indicating that we have probably a continuation of the trend. Of course, the dollar yen was in a very big uptrend. We had a very big triangle as well, like that, but we have recently broken out of that triangle. So any move down here, as I said, is most likely a retracement from our upside. And from this daily perspective, we see that any down move is in fact a hook back to the broken triangle. All right, and a broken triangle is most likely a support level, and we will see that upside kick in on the dollar yen. All right. Don't forget that a broken resistance most likely will become a support in the future. Of course, not always. That depends from case to case. But in this scenario, I do think that the broken triangle will provide that guidance. Okay. Now let's take a look at the weekly chart still. The weekly chart, we have a weekly candle pushing through that triangle, as I already indicated, but it does have a bit of a wick. All right, so from a price action point of view, that is not a it's a confirmation of the break, but not as good as we would like to have had it. That's because, of course, Friday had some downside momentum because of the NFP. So we'll have to see. But from the other perspectives, I do think there's a lot of upside here potential. So we'll have to see when it happens. It could be later this week. We could bounce in this area for a while before the currency chooses its direction. Let's take a look at the euro dollar. Euro dollar is still stuck in the wedge, of course, that we have here, or the range indicated by our purple lines. But we have broken the 132 support. So that means that there is a potential for the euro dollar maybe to fall back to the bottom of this smaller range right in here, like that. All right. Any move up, in my opinion, is actually setting the currency up for a down move. All right. Any up move is still a retracement unless we break above the 134, 134.50 resistance level. So any up move should see that resistance and push it back to the daily bottom of the range. Okay, so that's something we can look out for. Why is that so? Well, if we zoom into the daily chart, you'll see that in fact the currency broke this 132 support level right in here, indicating that the upside is probably temporarily toast and put in the fridge. And we can see that this is a down move already, and that most likely that downside momentum will last all the way to the bottom of the range. Now, at that point in time, of course, a bounce is likely, but that's of later order. That's something we'll revisit next week when it happens. So that's the most likely scenario here, either continuation or, if we do move up, resistance for that fall. That is at the moment, the path of the least resistance on the euro dollar. With that said, I think it also would be wise to take a look at, for example, the dollar index to see how is the dollar shaping up. And if you look at this dollar index, in fact, we had a downtrend channel that has been broken out of last week. And we also had an inverse head and shoulders here, right at weekly support. That green line is a weekly trend line. The light green line is a weekly bottom. That's exactly where the currency turned because it couldn't find enough power and energy to break through that support. So what happened? Well, we broke out of the downtrend channel, moved up, but the 50 fib at the moment is the major resistance spot. So actually, from the dollar index perspective, last week's high and last week's low will be very important. The 50 fib, for example, if that is broken, we probably have space up to the 618, and if we continue up to the 786. Now, if we break last week's low, then we might see a fall back to that weekly support line. So that's what's going on the dollar index at the moment. Let's take that information and see what's going on with the pound dollar, for example. How does that relate to the pound dollar? Well, the pound dollar is still beneath or below the weekly triangle that has been broken already in, I think this is February. Made a good down move here, and we've been correcting ever since. Now, this last correction has actually happened with a very neat trend channel, as you can see. So as long as price is in that uptrend channel, this thing is moving up and seems to be continuing to move up. However, if the uptrend channel breaks, and not only that, we break the support level at 154.20, then we'll probably see the downside continuation. All right, so those are very important levels. Anything below 154.20 means that not only do we break the daily support, but also that uptrend channel indicated by the light green lines. And then a fall, most likely to 148 or even 140 or even 130 could materialize. Now, if we stay above, I should say above the green line and in this uptrend channel, then in fact maybe we have more space to the upside. The only major problem with that upside at the moment is that it's very, very close to major resistance, which makes upside trading very dangerous at the moment. So what I'm looking for is a break of those red lines and a hook back, and I gladly trade it up to 160. which is the next major resistance. Now, if we don't break those red lines and we break the channel and the support, I gladly trade it to the downside. So those are my key levels. All right, this is the cable pound dollar. We can take a look at the weekly chart. You can see a pretty big weekly candle, just a small wick at the top. So that's indicating bullishness. All right, but because of the resistance, I'm not willing to speculate on such an event. It's too risky in my opinion, and I would rather wait for the break either of the upside or let the upside break that resistance. This is the 4-hour chart, and within that channel you can see indicated by those green lines. If we zoom in to the 4-hour world, you can see a smaller channel as well, indicated by this green line that I just added. Alright, so some interesting stuff going on here on the pound dollar. Now this, from a price action point of view, is looking corrective. The upside is looking corrective because the angle of price is quite shallow. So that could be one early indication that it will fall. But once again, I wouldn't want to trade that. Wouldn't want to trade that information because it's not enough for me to have that bias, that, or not enough confirmation, I should say, for me to trade that. Alrighty, let's move on to the Australian dollar versus the dollar. And you can see that the Australian dollar is pushing above this trend line. Alright, so that's indicating some strength here. The Aussie did move up a lot. This is the 4-hour chart, by the way, and you can see that time frame right in the corner here. And the Aussie is moving up a lot versus the dollar, but it's still at major resistance. So for me, longs are only interested above the 93.20 level, 93, and shorts are interesting if we go back below and break this support, because we do have support at the moment around, first of all, around 91.15 here, and a bit lower as well. All right, I mean a bit higher, sorry, right around here. All right, these are still support levels right now, so I would like to short it below here, below 91.15, and then again below 89. So those are my key levels. Right here, I'm neutral. This is a neutral zone for me because it's between a broken trend line and the resistance. So those are the key levels I'm looking for on this Aussie dollar. And you can see the zones where I'm willing to go long and short, of course only preferably after we've broken and pulled back. What I mean with that is something like this, a move down, for example, a pullback, and then that's a good short probably for that downside momentum. Don't forget that the Aussie has been in a major downtrend for 4 or 5 months now, or 5 in fact. So I'm not changing gears all too fast. I want to see if this downtrend momentum can continue. Let's take a look at gold. This is, by the way, the weekly chart, and you can see that big up move indicated by a pretty good bullish candle, engulfing bullish candle actually, if you compare it to the week before that. So that could see some momentum continue, but we'll have to see how price responds to the 93 level, because there's no guarantee that just because of that weekly candle will break 93. XAU USD, well, we've had 2 weeks of dojis. I'm on the sidelines for the moment, but if we, for example, were to break last week's low, maybe we can retrace deeper. But then I do think that any of these fibs, if you fib from bottom to top, would become support. Okay, primarily the 50, 618, and 786 probably. If we were to break the top at 1433, 1433, that will probably have upside potential up to the 1520, 1550 level. Now the 1520, 1550 level is a major resistance because that was major bottoms in the past. All right, so that's something we have to be aware of. that those bottoms will become major resistance. So if there's any upside potential, which I do think there is, if we break 1430, it will be stopped most likely at those major resistance levels. That's XAU USD. Let's take a look at the dollar CAD. Dollar CAD was in a beautiful uptrend channel, but has been fighting against that resistance around the 106, 106.50 level. So we're now moving back towards support. We'll have to see how this price responds to the support level, if it can move back up to resistance or not. If it doesn't, we'll have more space to the downside here when we break those support levels. If we do, we'll have some space back up to 106, 106.50. And if we were to break those resistance levels, maybe some more. That's the dollar CAD right in there. From the weekly chart, I'll zoom out now a bit to place it in perspective, and you can see that there could be some space if we break those resistance levels for more upside here on the dollar CAD, or downside when we break that channel. Not much movement in general on this weekly chart, indicated by a very shallow angle here, although it was or is still an uptrend. So any pullback here, we should still be on the monitor or be on the lookout and monitor if we get the bounce to the upside anywhere above the purple and the blue line here on the dollar CAD. Let me show you that trend channel, in fact, on the day chart so you can see that a bit better. There it is, the purple line connecting the first three lines, or bottoms I should say, and the blue line connecting the second bottom with the third, fourth, and fifth. Alright, so that's both our support lines, in fact, and price is now moving back towards those supports. So we have to see if we get a bounce there or not. One more thing I wanted to show you is the Euro AUD. Let's start from the weekly. And that's interesting because we've had a very serious upside. And you can see that upside was 3,000 pips all the way from 152, 122 to 152 or 150. Very serious upside. And that upside seems a lot, but if you compare that to the downside that we've had the last few years, that isn't even as much as it fell. So just to give you an idea how much the Euro AUD has moved really recently. And the very interesting thing about that upside is that it seems to be coming to a halt. Because if you look at the most recent 3,000 pip up move, and you put a trend line at the bottoms, you can see this up move was great trading to the upside, very impulsive to move to the upside. But what has happened recently, if you connect those bottoms and you put the green trend line on, we actually broke. We had engulfing. We had a big wick on the weekly here, and the daily as well. We broke the light green support trend line, and we've also broken the tops in here and bottoms on the daily chart. Now that's important because not only did the trend line break, but also the daily support. So the Euro AUD could be become now a downtrend. We could see a pretty hefty down move maybe here. But we'll have to see if that's from now or how much it continues now, or if we first get a potential hook back before we fall. That's always remains the question. We did have double top here, the break of the trend line and the break of support. So it does look very bearish. Now the question is, will it happen from here? Or will we, for example, retrace part of last week's bearish candle? You can see here that wick I was talking about, plus the bearish weekly candle continuation. Will we see a retrace of that weekly candle for more downside, or will we see immediate downside? So personally, a retrace of that weekly candle would be great. Anywhere about halfway that candle could be the turning spot already. That would be around 146.50, 146, sorry, 146.50, 147. Those could be resistance levels for more downside. So very interesting here on the Euro. That's something I definitely wanted to share with you, because such a massive upside could see a pretty big reversal retracement as well. maybe all the way back to, for example, this top right in here. Alrighty, that wraps it up for today. We're going to take a quick look at our Bet on Markets website, of course. You go to Bet on Markets website or go to binary.com. And you can take a look at the rise and fall of prices by, for example, opening a virtual money account. You can do that, and you can see what the rates would be for any currency and any price. Okay, start trading, for example. You can click on Forex, and then here you can choose the currency, the starting time, the duration, the payout you're seeking, and how much that would cost. Okay, so if you're seeking, for example, a $15 payout, you will see, and then click on Get Prices, you will see what the rise and fall would cost you. And at the moment, on the dollar yen, it would be approximately a 95% return if you purchase either the rise or fall. So take a look at that if you like. And I'm going to give you just a few seconds here to ask any questions if you want. I do thank you for your attention as well. And we'll be back, of course, next week on the 16th of September 2013. Hope you enjoyed today, where we took a look at, for example, the euro dollar, pound dollar, dollar index, dollar yen, Aussie dollar, euro odd, and dollar CAD. So we covered a lot of ground here. Gold as well, by the way. Hope you enjoyed that. And in the meantime, I'll show you this link. Please fill in your information there if you want a heads up when the recording is ready. That's always very useful, because then you can watch it at any time you want, later today or later this week, because the analysis will be valid, of course, for the entire week. And you can do that at blog.binary.com/weekly trading room. Alrighty. So I do thank you once again. Wish you all great trading this week, and see y'all soon. Cheers.